until now.
More than just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I'm Shraddha Babla. First, the headlines. Asian markets start the week on a mixed note after the US Senate clears the tax bill, paving the way for corporate taxes to fall in the US. And Infosys appoints Salil Parekh as its new CEO and MD. Parekh will take over from the 2nd of January in 2018. While the US FDA clears a biosimilar jointly developed by Mylan and Biocon. While automakers post double-digit growth in November, but not all managed to meet street expectations. Well, US stocks finished lower on Friday on reports that Michael Flynn was directed by President Trump to talk to Russians. This sent investors on a wild ride. Let's go across to Abigail Doolittle for all those updates.
Friday's Wall Street session really proved to be a bit wild. The Dow, S&P 500, and the Nasdaq all finished lower, but that hardly paints the full picture. At session lows around mid-session, the three major averages were all down more than 1%. In fact, the tech-heavy Nasdaq down more than 2%. The Dow at those lows was down 350 points. This around uncertainty around Michael Flynn and President Trump. Michael Flynn, former national security advisor to President Trump, pled guilty to lying to the FBI. He also agreed to cooperate on the Russia probe. And there was one report from ABC saying that he may testify against President Trump, connecting President Trump to those Russian contacts. Now, on the uncertainty of that, the unknown implications, we had that big risk-off sell-off for stocks. But then as the session continued, it moderated in a tremendous way. The Dow and the S&P 500 finishing down about 0.2%. The Nasdaq down about 0.4%. The Nasdaq, the only one of the three major averages, in fact, to close down on the week. So lots of volatility that's likely to bleed into next week relative to specific sectors hurt or hit on this news. We saw the industrial sector and the materials sector really slide on those headlines. Tech was another sector that really underperformed. Facebook, Amazon, Netflix, and Alphabet lower. That seems to be a bit of a continuation of the sell-off that occurred in Wednesday's session. And it truly was a risk-off session. If you take a look at the haven assets, bonds, the Japanese yen, and gold all higher as some investors were seeking safety. But Bitcoin, which really is hard to classify as either risk on or risk off, probably closer to risk on. Bitcoin was actually up 11% as U.S. regulators approved Bitcoin for trading in the futures market, and CME will begin trading Bitcoin on December 18th. Overall, though, a bit of a roller coaster day for stocks in the U.S. In New York, Abigail Doolittle, Bloomberg News.
Well, let's also take a look at how the Asian equities are faring this morning. Asian markets have begun the session on a cautious note following the decline in U.S. stocks on Friday. We'll, of course, be going across to Rosalind Chin of Bloomberg for all those live updates. But Nikkei is currently trading about 0.1% lower. We'll also put focus on Indian markets now. Darshan Mehta is here to set us up for the day's trade and all that happened in the futures and options space. Darshan, good morning. What's on your list?
Good morning, Shraddha. At this point of time, it seems that the SGX Nifty is indicating a positive start as far as our markets are concerned. No doubt, Asia is trading weak, but the SGX Nifty is indicating a positive start of almost 26 points at this point of time. Overnight cues from last week, cues from last week were not the best. All the ADRs ended with losses that came out. Most of the ADRs were down. ICICI was down 2%, Infosys was down almost 3%, Wipro was down almost 5%, Vedanta was down almost 3%. So most of the ADRs took it to the chin. Now, as far as crude is concerned, crude trades muted after a rally on Friday. It was up almost 2%, and OPEC actually has decided that probably they will extend the output cuts that will come in. That is keeping crude at an elevated level. Now, commodities, extremely strong close for the commodities, for the base metals, especially on LME. Lead and zinc were up, all were up 3%. Aluminium, copper and nickel were up anywhere between 1 to 1.5%. Tin was the only base metal that was trading with a negative bias. Now, even in Shanghai, the open has been extremely strong for all the commodities. Look at iron ore. Iron ore is up 6.5%. Rubber is up almost 3% in trade currently. Aluminium and copper, both of them are trading with a positive bias. So, commodities and metal packs is something that you have to watch out for. Gold trades with a negative bias in early morning trade. So, Friday, on overnight Friday, the cues were positive, but today those gains seem to have gone. FIIs have bought in almost 306 crores in the cash market. This is the NS3 provisional data for Friday, and DIs were net biased to the tune of 176 crores in the cash market. Now, for the setup for the Nifty is weak. It closed negative for the fourth straight session. Almost for the second day in a row, it was more than a 100-point loss for the Nifty for 2 days in a row. The Wick surged almost 9%. All the sectors ended with losses. Now, the sectors which ended with losses significantly were PSU banks, pharma, and real estate. So they were the worst hit as far as all the sectors were concerned. The Nifty was down 100 points. What caused majority of the damage? Reliance, Infosys, SBI and HDFC were the ones that contributed maximum damage. Only minimal gains coming in from some of the private banks and auto names that came out. But overall, it was a weak trading session, down almost 105 points.
Okay, let's also take a look at the F&O space. Darshan, what is buzzing in the derivatives market?
Now, if you're looking at, the Nifty and the Bank Nifty, the Nifty actually saw fresh shorts. Open interest was up almost 3%, and the index was down almost 100 points. It was down over 1%. So, fresh short positions were seen on the Nifty. Even the Bank Nifty saw fresh shorts on high open interest build-up of almost 8.5% that came up. Now, as far as the entire PCR is concerned, the Nifty PCR is at almost 1.2 now from the 1.3, and the Bank Nifty PCR is also much below the 1 level mark. The Bank Nifty showing a little more strength than the Nifty, but overall, because of the fact that put writers have been much aggressive. Now, maximum open interest for the December series is at the 10,500 call, and for the puts, they are trying to defend the 10,000 mark in trade. So, this is the entire range that is happening. Now, where were positions taken on Friday? Just look at the call writers. They were writing in from 10,200 to 10,700. So, aggressive amount of call writing that is happening. At higher level, put writers were forced to shed positions. But these are the levels that put writers are looking to defend. So, wherever the red you see, 10,000, 10,100 and 10,200. So, it seems that 10,300 will be a big resistance for the market, at least at this point of time. There are no stocks in the F&O band, but some of the counters you have to watch out for. Indiabulls Housing saw fresh shorts. Open interest build-up was at 4%, and the counter was down 5%. So, aggressive short positions were seen. Same was the case with Z. 7% open interest build-up and fresh short positions were seen. And finally, you have one more counter, and that is Apollo Hospitals. That saw short covering that came in. Open interest was down 6%, and the counter was up almost 4%.
Thanks for bringing us all those details, Darshan. We will be watching out for those aspects. But let's shift focus to commodities and currency markets now. Jayesh Khilnani is joining us with all those updates. Jayesh, morning. Metals, of course, are trading much stronger in Shanghai today.
Morning, Shraddha. That's right. We are seeing some bit of positive bias for all the base metals on the Shanghai Futures Exchange. But let's look at how the entire week closed last week. So we saw the LME base metal index, which actually posted the first gain in all of last week as of Friday. So Monday, Tuesday, Thursday was all negative for the base metal index. And if you look at the entire week performance, it ended the week down more than 2%, which is the biggest fall that it saw since the month of September. Now, the LME base metal index, copper and nickel were the big draggers since September. Ended the week down by about 3 to 6% each. Now, LME copper especially had some news where the inventory data came down 14% for last week, which was the biggest surge in about 12 years. Moving on to gold prices, we are seeing some bit of softness after a surge on Friday's trade. So, spot gold is trading near the 1275 mark as the dollar has retraced. Moving on to the energy space, oil markets are trading flat in Asian hours, but that is after a big surge on Friday that we saw after OPEC promised to restrain the output curbs going into 2018. Goldman Sachs has come out with a note in which they have made a very interesting comment, and they say that oil markets are too jittery when there's no need to be. So we'll have to wait and watch what actually comes out, but do keep an eye out on the metal space.
Jayesh, what are the cues that one should watch out for in the currency markets?
So Shraddha, it's important to note that on Friday, the currency and the bond market were shut on account of a public holiday, and we are likely to react positively to the GDP data that came out. So the INR actually snapped its 3-day winning streak and depreciated about 0.2%, while the 10-year actually closed above the 7% mark for the 5th straight session. So wait and watch out for that one as well.
All right, thank you for that, Jayesh. We'll move on straight onto a Bloomberg Quint exclusive. Now, in a conversation with Bloomberg Quint's contributing editor Pravin Chakravarti, the chief economic advisor Arvind Subramaniam discussed the condition of exports in India and what effects have the twin experiments of demonetization and GST had on the Indian economy. Take a look.
There is certainly one school of economic thought in India, which is export growth has been so anemic, especially the last 2 quarters of global growth has been very, very robust. And in this context, the argument, or this school of thought argues that small and medium enterprises account for half of India's exports. There are perhaps supply chains are broken, and we may have a deeper supply side issue here than we recognize. Do you subscribe to that?
See, I think there's been some confusion over the export numbers. I've been looking at them a little bit carefully, and if you look at manufacturing export growth in the last 3 months, it's been at about 9% in value, dollar value terms, when you do the smoothing and everything. Manufacturing exports, okay. It's a bit down from the early part of the year, but 9% growth is still substantially greater than what we were doing for much of 15 and 16. Now, so in that sense, I think it's picked up. I think the question, what is not clear to me, and we're looking at the numbers, is have our exports grown commensurate with the pickup, as you said, in world trade volumes and the pickup in growth in many of the other countries as well. It's not clear to me. We're looking at the analysis, but it's not that exports haven't picked up from the trough of the 15 and 16. 15 and 16 exports were really, I think, export growth was very weak. And now they have picked up. Part of it, of course, is world demand. But your question about have supply chains broken, I think the jury is going to be out, because unless we get a good sense of how the rest of the world is doing. Also, we're doing some analysis for the survey to see, in fact, whether exports have been affected by the twin experiments that we had or not. Both demonetization and GST. So we're going to look into that a bit more carefully. And so until we finish that, I still would like to reserve judgment on that.
Then what about imports? I mean, imports been very strong.
See, I think the supply chain broken story is for both exports and imports.
Correct. That's why I asked the question.
Exactly. So it was true that import growth was very rapid. But in the latest few months,
non-oil, non-gold.
Yeah, exactly. I'm talking only non-oil, non-gold. Exactly. So the argument was that there's been a negative supply shock, which has affected both manufacturing exports and domestic production competing with manufacturing imports as well. Again, we're looking at these things exactly as we speak, and reserve judgment. But on the import numbers too, the latest numbers show a marked deceleration relative to earlier. So let's see what is due to what.
And on to the big development over the weekend. IT bellwether Infosys has appointed Salil Parekh as its new CEO and Managing Director, and that's nearly 4 months after former Chief Vishal Sikka stepped down. Now, Parekh has been appointed for 5 years and will take over on January 2nd, 2018. The 53-year-old computer science and mechanical engineer who was a group executive board member at Capgemini will be taking over from interim CEO Pravin Rao, and his past experience of heading application services at the French firm is expected to help him steer Infosys through what can be described as challenging times for the IT giant. Well, coming on to some reactions that were drawn after the announcement, you have R. Chandrasekhar, the president of NASSCOM, who said that industry knows Salil Parekh very well and he is well rooted into the ecosystem. Here's what more he had to say. Listen in.
I think this is certainly a very positive development from multiple perspectives. First and foremost, Salil is a well-known figure in the IT industry. He was leading the application services at Capgemini. So he's well-known in the industry knows him well, and so he's well-rooted in the ecosystem here. The second is he also has, by virtue of having been in Capgemini, multinational experience, global exposure and experience. So that's certainly another factor which would stand Infosys in good stead. And finally, I think this brings the curtains down on the various issues which arose, when Vishal Sikka left Infosys. And there were many questions about the change and, what would be the roadmap ahead. And I think Infosys needs to be complimented on having brought things to a swift close and having settled that issue and enabling him now to get on with the job.
Bloomberg Quint's Nishant Sharma spoke to Kiran Majumdar-Shaw, who's a board member of Infosys. Here's a slice of that conversation.
Understands global trends, that he works for a fairly, a sizable multinational company, which also has a very large workforce in India. Obviously, culturally, he understands, India and the Indian business and the Indian, workforce. So we felt that was a very good, fit as well. So I think overall, I think he came through as a holistically very good candidate.
And what do you think? What are his core strengths that will complement Infosys in driving the growth? Now we are into a phase of transition to a digital approach as well. And
so I think Salil brings on board the kind of skills that we are looking for. He has been a turnaround manager in Capgemini. He has grown new businesses very well in Capgemini. He understands the digital space very well. He's considered to be a good people person. He is, a very soft-spoken, but at the same time very determined and firm person.
And Sudhin Apte of Offshore Insights believes that Infosys has done a good job in getting a person from outside. He also believes that Salil Parekh is a good fit from the experience perspective. Let's hear him out.
First point, it is good that they have got a person from outside who is fairly senior, would be based, sort of near client as well as knows the offshore location. So I think, from experience and profile perspective, surely a good fit. So that's my point number one. Point number two, I think, it's good that, it's not delayed further. So from timing perspective, they had said October end, for appointment, slightly delay here and there, which is okay. So, good that they have come to conclusion and got somebody who is fairly experienced, can handle this scale, because, Capgemini is a fairly of a similar scale. So, very similar experience, very similar profile of business handling. So, good fit, prima facie.
Most Indian automakers reported strong sales growth in November due to a low base when the auto industry was hit by tepid demand after the government's demonetization drive. But not all have managed to meet street expectations. We have Darshan Mehta, who's joining us for giving us an update on how the auto sales numbers were. Darshan.
Well, a couple of them came out with decent set of numbers. So Ashok Leyland, you had Tata Motors as well as Hero MotoCorp, which came out with strong set of numbers. Maruti met street estimates, but the others were rather weak. Now, individually, let's take some of them. First of all, Ashok Leyland, they were above estimates. Mainly the medium and heavy commercial vehicle gains for November was almost 54%, and LCV sales were up 44%. Bajaj Auto, weak set of numbers from the two-wheeler. Total motorcycle sales were up almost 11%, and CV sales on a low base was up almost 94%. Even Eicher came out with weak set of numbers. The Royal Enfield model with engine capacity up to 350cc was very strong. That was up almost 26%, but the hit came in because of a decline in models with an engine capacity of more than 350cc. 55% growth for the Volvo Eicher commercial vehicle business that came in. Hero MotoCorp's very strong number. It's a seventh straight month of selling more than 6 lakh units per month. So very strong numbers from Hero MotoCorp. Maruti met street estimate. Passengers vehicle was up, or sales was up 11% because of the compact vehicle segments like the Baleno and the Brezza. Ciaz was down 26%. UV was up 34%. Vans was up 11%. So mainly it was the domestic markets and the compact car vehicles that led growth for Maruti this time around. M&M was below estimates. Passenger vehicles was up 21%. Commercial vehicles was up 22%. Three-wheelers were up 13%, but export was something that was rather weak for M&M this time around. Even the tractors were weak for M&M. Domestic sales was up 32%. Export sales was up 27%, but coming in below what the street was anticipating. Tata Motors above estimates. CV sales up 55%. Car sales was down 4%, but the UV sales was up. So CV sales was led by strong sales both in the heavy commercial vehicle and the light commercial vehicle. And finally, TVS Motors, weak set of numbers. Below estimates, scooter sales grew 7%. Motorcycle sales grew almost 37%. Despite the growth that came in, strong set of numbers. It was much below what the street was anticipating.
All right, thanks for that, Darshan. But on to the stock of the day. Setco Automotive reported a stellar September quarter. The net profit jumped threefold to 14 crores. Nikki Mirchandani joins us with all the details. Morning, Nikki. What has driven this stellar performance for Setco Auto?
Hi Shraddha, good set of numbers. Just to keep you first, let's run through the basic numbers. Revenue have been up as much as 31% in this quarter on YOY basis at a number of around 135 crore. EBITDA for that matter has risen 54%, a good operating performance there at 18.5 crore as compared to 12 crore in the corresponding quarter. Margins have expanded at 13.7% as compared to 11.7% seen in the corresponding quarter. Net profit for that matter has come in at 14 crore as compared to 1 odd crore in the base quarter. What has led to a good set of numbers? Well, post GST implementation, all business segments have registered significant growth. Higher sales combined with your lower cost has led to good operating performance. If you say employee benefit, that as a percent to your net sales has come down to 8.54% at a number of roughly 10.2% seen in the corresponding quarter. Other expenses have come down to 18% of your sales as compared to 22 seen in the corresponding quarter. There is a sharp jump in other income along with your lower depreciation, which has led to a good show in the bottom line. While if you see other income has jumped 4 folds to 7 odd crore as compared to a number of nearly 1.8 odd crores in the corresponding quarter. Now other income does include 4.53 as a finance income due to redemption of preference shares investment. In terms of segmental revenue breakup, you're seeing a good set of number of OEM, which is a 90% growth out there. Aftermarket segment has seen a 12% growth, and exports segment has risen as much as 44%. Also, the company has given a good outlook coming in for FY18.
Thank you for that, Nikki. Moving on, Biocon and Mylan have received a go-ahead from the US pharma watchdog to sell a biosimilar that has been jointly developed by the two drug makers. Let's go across to Darshan Mehta for all the updates. Darshan, how big is this for Biocon?
Well, this is really big for Biocon because, there were issues as far as whether Biocon will be able to launch this drug given the problems at their Bangalore facility. But with this approval, it puts to rest that, the speculation whether their plant is fit or not. So this gives an indication, yes, yes, the plant is fit, and that is positive. Now, basically, the commercial launch will happen in 2019 as per the settlement that they've done with the innovator Roche. It's a market size of $2 billion in the US markets, and the full impact of the financials would be seen in FY21 onwards. Basically, there are 4 to 5 players that have already filed applications, so that is something that needs to be watched out for. But this is extremely positive for Biocon. 2 brokerages that have come out. First of all, Morgan Stanley has raised the target price to 648 from 431. What they're saying is that this approval provides a clear pathway to commercialize this opportunity, and this is a positive read-through as far as their Bangalore plant is concerned. CLS is of a different view. They've raised the target price to 350 from 210, but they maintain a sell. They are saying that this approval that validates Biocon's capability in developing biosimilar, but at this point and the valuation, this entire pipeline is fully priced in for Biocon.
All right, thank you, Darshan. We will be watching out for Biocon, but there are also many other stocks that will be the center of action today. Let's see some of them. Of course, first up, you have Wipro, where the National Grid US has filed a $140 million lawsuit over ERP implementation. So we do need to keep an eye out for that name. You also have Dr. Reddy's, which has received an EIR or a clearance from the US FDA for its CPS facility at Telangana. Next up, you have Tata Steel, where they are going to be acquiring 74% stake in Bhubaneswar Power from JL Power Ventures, and that will be for an amount of 255 crores. You also have DLF, which said that they will be raising a total of about 11,250 crores via convertible compulsory debentures, some warrants and QIP as well. On the M&A front, you have a ET report which is saying that Z-Learn could pick up as much as 42.78% controlling stake in the company. Z-Learn may make an open offer for about 20% stake, and they will buy out the entire promoter block of that 42.78%. The transaction, the report says, is likely before the fiscal end, of course. And you have JSW Energy, which has secured power purchase agreements aggregating to 208 megawatts. The long-term PPA proportion, the company said, has now increased from 64.6% to 69.3%. You might also see some small positive reaction on transformers and rectifiers India, where they have received orders worth about 127 crores, while you have Merck Electronics as well, which will be in focus as the company will raise 144 crores via share allotment and warrants to the non-promoter group, but that will be at a significant discount to its Monday's closing price, so do keep an eye out on all those names. And finally, we also have with us Somit Sarkar, who's standing by with the big brokerage calls of the day. Somit, we have some price target revisions coming in for Jefferies for cement companies.
Yeah, Jefferies has revised the price target for cement companies. Now, they are saying that in the near term, cement companies have 2 headwinds. Firstly, the petcoke ban. Second is the sand mining ban. Now, the petcoke ban is expected to impact the cement companies' EBITDA by 2 to 11%, while the sand mining ban will at least impact the demand in 5 states, according to Jefferies. Now, on the back of these 2 reasons, brokerage expects the demand to remain subdued in the near term, even after accounting for the low base of demonetization quarter. Now, for Dalmia Bharat, they have downgraded the stock to hold from buy and have cut the target price to 2957 from 3038. For other cement companies like ACC, Ambuja, Shree Cement and Ultratech, they have maintained their rating but have raised the target price. Now, second we have is Edelweiss on DLF. Now, they have maintained their buy rating but have hiked the target price to 273 from 185. Now, balance sheet recovery will provide significant operational flexibility to DLF, according to Edelweiss. Secondly, a fundraising would bring down the net debt to equity of DLF to 0.4 times from 1.1 times. Now, DLF is planning to focus on high-end residential segment in the NCR region, and DLF will continue to focus on completing its ongoing residential project in this region and be prepared with the ready-to-move in inventory to be sold once there's a revival in the demand. Now, they expect the brokerage is expecting gradual uptick in DLF's operation in the coming quarters. However, DLF is the key beneficiary of consolidation, according to Edelweiss. Secondly, they have a steady rental portfolio, and thirdly, this improvement in balance sheet are all positives for the DLF, according to Edelweiss.
Thanks for that, Somit. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Senate Republicans narrowly approved the most sweeping rewrite of the U.S. tax code in 3 decades, slashing the corporate tax rate and providing temporary tax cuts for most Americans. And news app InShots is in advanced talks to raise $15 million from new and existing investors after a hiatus of nearly 2 years. Existing investor Tiger Global will lead the funding round, which will also see participation from new Chinese investors. 2 people that were familiar with the plans told Bloomberg Quint, requesting anonymity. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in to Bloomberg Quint.